This is a $31 million office in Cool Springs, one of the wealthiest suburbs in Tennessee. And with the massive migration boom, the county has been growing at an astronomical 4% a year. Yet this office that was fully leased just a few short years ago sits empty.
They have 6 tenants, it looks like, total. 6.
What makes it really interesting is who actually owns it. I cannot believe that an office like this, real quality, in a growing area with a great economy, could actually be
I don't normally do this
so
type
I
of
had to
thing.
go see it for myself.
Really gorgeous building. It's about 150,000 square feet. Just came in the front door. Space available. Space available. We have about 150,000 square foot building, 17% lease occupied, but even businesses that are leasing this are not showing up. Now, why this is important is because you gotta ask yourself, who owns this building? It was 100% leased when they bought it at a 6.8 cap. Now it's 80% vacant, and office cap rates have gone up. So even if they were making the same income on this office, it would have dropped in value by 20%. Can you all hear the echo? This is so weird. Williamson County assessed this building at $34 million. So this building is probably on a balance sheet somewhere for $34 million. I mean, what do you value a building that's 20% occupied at? I mean, they pay $300,000 a year in property tax on this building. Okay, this building is owned.
Okay, I can't wait to tell you who owns this building, but there are implications. And so I do want to provide some context. You see, this wasn't just a one-off purchase. This was one of 5 buildings that were purchased together. By Stockbridge Capital acquired the 5 office buildings that comprise Corporate Center in Franklin from J.P. Morgan Chase & Company's core fund for $165 million, or $235 a square foot. The going-in cap rate was reported to be 7%. However, as the contact advised, this might be slightly inflated. A more accurate figure would be the stabilized cap rate, which was reported at 6.8% and equates to about $11 million in net operating income. This was an all-cash deal. Okay, let's pause right there. 5 buildings at $165 million. Now, they're not all vacant. There's 219,475 square feet that is vacant. That gives you about 500,000 square feet that's rented. If we take today's market rate of $33 per square foot, we get $16.4 million. You multiply that, assuming a 40% expense ratio, that gives you a net operating income of $9.9 million. If we use the cap rate of 6.8%, which we know is gone, we would get $145 million. But with an 8.2 cap rate, we get $120 million. Guys, this went from 165 to 120. If you're feeling bad about your Robinhood account, just remember these guys who are experts, expert brokers, expert property managers, they've lost 30% value on a $165 million investment. So, for what it's worth, that ain't too good.
Hey, here I am. Here's the view from the alcove. Just nothing but construction. As fast as you can build it. Amazon.
Okay, pause. Do you see that building right there? That's Assurant. They shut down 3 floors of office space because they just didn't need it. Right across the street, Amazon has 2 towers. The second tower, they stopped building and now I believe they're subleasing it, I guess. I don't know. Go down the street and you see the Regents building where WeWork is. It's 70% leased before WeWork filed bankruptcy. And Nashville's most iconic building, the Batman building, it's only 63% leased. I could go on and on. There are lots of empty offices. And it's not just offices, it's apartments too. Look at Flynn. Flynn is 70% occupied. It opened a year ago, but now they're struggling to lease it up. They can't quite get past that 70% mark. And now that it's been a year, they're having to renew leases of tenants that can look elsewhere and find better deals. Look at Margot, look at Harlow, look at Alcove. Alcove's only 30% leased up, and they've got another building right across the street, their sister building, that is going to be opening next year. CoStar is showing that vacancy along the Nashville metro is at 11%, which is really high, and rents have actually gone negative for the year. But that's just on the revenue side. When we look at expenses, they're soaring right now, like insurance that's gone up 20% year over year. All of this squeezing net operating income.
By the way, and I think these banks, because 80+% of the commercial real estate loans are held by local and regional banks, and I think that
every single regional and local bank across the country is now assessing their loan assets and liabilities. And
it's no secret that the banks are taking it on the chin with the commercial real estate crash. But there is another group that's been flying under the radar. It's been underreported at best. That group has been absorbing massive losses in commercial real estate. That group is you. That's right. The office that I was walking through, that building, that's owned by the Florida pension system. And there are offices and multifamilies all across this nation that are sitting in our retirement counts with opaque names and retirement funds that own retirement funds. And now you may ask how much exposure is actually there. And I'm just going to go ahead and tell you, I know it's a lot, but I can't even figure out what's in my 401k. I spent 90 minutes the other day on the phone with my 401k just trying to figure out, did I even own any commercial real estate? And I don't know. But when I find out, I promise you, I will let you know. Thanks for watching. I hope you enjoyed this.